Hello, I am Wael Yahya, Certified Financial Technician Expert from the International Federation of Technical Analysts. In this video, we will apply and update our classical technical analysis view over the short term for the S&P 500 index. And let us see the conditions required for a correction that can be sideways or can be a relatively uptrend over the very short term. From the previous video we already knew that we are having a major downtrend over the weekly chart consisting of lower highs as well as lower lows. And here we drew the downtrend line, and here is the down channel line. In order for the index to be relatively healthy, we need the index to manage to close above the down channel line all the time, because this gives us hope of a correction at any given time. So even if the index kept sliding above the down channel line, it's okay, because at one point it will create a correction against the prevailing trend. So first condition required to be met, a close above the down channel line all the time. This is the first condition. The second condition required is to break the downtrend line over the short term. This downtrend line, which is marking the short-term impulsive wave to the downside, this trend line should be broken, and of course the break should be valid and confirmed by at least 3 sessions closing above this trend. And once again, it can be accepted to slide above this broken trend line, and it will give us some kind of hope of a correction by the time over the short term. So a break above the downtrend short term line is the second required. Down trend line over the short term. This is the second condition required to be met. The third condition, and I think it is the most important, is the ability of the index to break above the horizontal short-term resistance at around 3,950 points. Especially this level, if broke and the break was confirmed, it will be the last resistance facing the index. Otherwise, after it can easily target 4,100 over the short term, and the bulk of resistances ranging from 4,200 up to 4,300, which is considered an area of multiple resistances. First, a horizontal weekly, and the downtrend weekly, and a short-term horizontal resistance. It's an area of around 150 points thickness, which can be the target over the medium term after a valid correction taking place. And so let us write the third condition required for a healthy correction to take place is the break of the short-term resistance at around 3,950. So these are the most important 3 conditions required for a healthy correction. The result of this healthy correction can be a sideway that can continue over the medium and the long term. This is an option, and the better option is that this correction turn into an impulsive wave, and it will be considered the first impulsive wave in a new major uptrend. Of course, this is too early and too soon to talk about such circumstances. First of all, we just need a valid correction to take place. And after this valid correction takes place, we will later on decide if we do have a trading range or if it will be an uptrend. The result of the correction, I think it will be too soon to talk about it, because maybe it reaches the downtrend line, maybe it reaches this downtrend line and reflects again to the downside and even break the last support and resuming the major downtrend once again. So do not go into expectation games now, and just keep an eye on the conditions required for the index to create a healthy correction. And as we have said, it's a correction. Whatever you may think, the correction is always against the prevailing trend and is always having high risk, and it's also expected to be short in the time frame and higher in risk. That's why it's not good idea to have a buying strategy for the time being, because any buying strategy will be against the bigger time frame, which is not a good habit to acquire. And for a better use of this correction, it's good to wait at around the areas of resistances to take virtual trading on the short selling side, or to minimize any losses from the buying old positions or from the old buying positions. So at this area you may take action, either virtual trading by short selling or minimizing previous short-term losses from any buy positions. And this means that the distance to be traveled, you will be just waiting or watching for chances with the prevailing trend. And this waiting is very difficult emotionally, and psychologically it is hard and tough to wait for a chance that may take 2 or 3 weeks in time. And I don't advise to take a counter trade position because the high risk it carries in it. I don't like the habit of counter trading, and I prefer to wait for a better risk scenario, a lower risk environment, and when the index touches or reaches this area, I will be looking for signals to virtual trade on the selling side. If the index, instead of giving sell signals, it gave potential strength, and instead it gave buy signals, then things may change at that time, and the structure of the market maybe have changed as well into a better rising environment, maybe something bullish, maybe a trading range of a very wide thickness. At that time we will determine whether it is better to go virtual trading by short selling, or if the market gave a positive signal, then we may reconsider the structure as a whole. That's it for the time being concerning the S&P. Keep in mind that Dow Jones and the Nasdaq are identical to the structure of the S&P 500 index, and the difference is only in numbers and levels and points, but the structure, the trend, the wave, the moves, the corrections, all are the same, just the number of points and the levels are changing in numbers. Please feel free to like, share and subscribe, and see you soon.